You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we're back. Yes, no market holidays this week. We're back in action to talk a little bit of volatility, and boy, do we have some to talk about. So it's a good thing. Otherwise, we'd be bored here on the show this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. You guys know where to find all the good stuff. Theoptionsinsider.com or the app are the two places to go for all you guys who are asking, hey, I want to go crazy far back and find some episode from way back in the primordial ooze days of the network, 2007 or something like that. You can do that. Those are the easiest places to do that in those places. If you go to like the iTunes or all the other places where available, Stitcher, those places, they probably will cap you at 50 or 100 most recent episodes, and you got to kind of dig a little bit. So if you want to go deep, the site and the app are the easiest two places to do just that. But you can get our stuff pretty much anywhere, including live. For Vol Views, it's every Friday, noon Central, 1 p.m. Eastern. Again, it's via that old Mixler. You can grab it. You can follow us there. I know hundreds of you do that as well, so you get notified the second we go live. So if you're available, maybe you want to take a break from your job, maybe you're eating lunch right now, you want to join us, talk a little bit of volatility, we'd love to see you in there. Of course, however you do it, however you listen, live after the fact, however you come to us, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys, especially in weeks like this when things are, shall we say, topsy-turvy. All right, and joining me on the old Volatility Views program today, let's see who we got in the old hopper today. It's an ever-evolving ensemble here on the old Volatility Views program. This week, though, I think we got some stalwarts, some old favorites coming back. First off, I think he's perhaps in a Costco parking lot near you. He is the greasy meatball, Mr. Mark Sebastian from Carmen Line Capital by way of OptionPit.com. Mr. Meatball, welcome to the show. And in which municipality are you at a Costco in right now?
I'm not in a Costco. I'm in my office at on the 30th floor on LaSalle Street, overlooking the financial capital of Chicago, and enjoying and reveling in a big Villanova win. And then my wife, I was at the reopening of the W City Center yesterday. It was a blast. My wife walked in the fashion show, and it was a good time. Met Tom Thayer, former Chicago Bear. Tom Thayer, which made my day. It was basically the only real reward for going, besides seeing my wife in the fashion show, was getting to meet one of the members of the 85 Bears, the famed 1985 Chicago Bears.
Yes, quite arguably the greatest team of all time. Also, probably the most savaged by CTE and everything else post that game. But for that brief flicker of time when they were beaten up on my beloved Pats as a kid, back when the Pats were, before they were the dynasty they are today, yes, the 85 Peers are quite the juggernaut. And Mark, when he says his office, he means the back room of the Costco there in Riverside, Illinois. All right, and also joining us, I think he's back from parts unknown. He goes and vanishes into the Balkans for weeks at a time, but we finally got him back. He is Mr. Russell Rhodes. I don't even know what the heck his title is over there anymore. Let's just call him Man About Town over there at the CBOE / front desk receptionist. Mr. Rhodes, welcome back to the show, sir.
Well, I was off smoking peyote, having a vision quest with respect to volatility, and all I can do is come back and tell you that I continue to be uncertain as to what's going on.
You and just about everybody else on the planet, sir. So let's get to it. Let's dive into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is. Before we even get into that, because a lot of Vol is popping off right now, we want to make a special note here because it's April. That means it is indeed the 25th birthday. 25th anniversary of a product we like to talk about here, or at least an index we like to talk about here quite a bit. You may have heard of it. It's called the Volatility Index, a.k.a. the VIX, a.k.a. the Fair Gauge, a.k.a. call it what you will. Yes, it was 25 years ago, April 1993, when CBOE first began disseminating this beloved thing that we would end up building a show around all these years later, and kind of really cemented the discussion of volatility for a lot of people out there who, and of course, have created this entire universe of volatility-related products for people to trade as a result. So it's been a momentous thing in terms of the markets. I know you guys are celebrating over there, Mr. Rhodes, with all kinds of stuff. One of the things you guys have been doing, which has been disseminating a bunch of interesting data, looking at just what's been going on for the entirety of that 7,117 daily closes for that VIX index, and looking at some of the numbers that came out of all that data. So let's go back and look at a few of those for ourselves in terms of the index. Again, this is for closing data, and just in data in general. People have always debated what that long-term average of VIX is here. According to this data on the closes here, the average 19.4 with a median of 17.5. So all of you people who are saying, it's something else, maybe that data is there. And we've argued on the show, maybe it is. We thought it would be a little bit lower, but there you go. There it is in the numbers. In terms of other data points, the maximum daily close, going back to 80.86. I bet you probably can guess what year that was. That was November 20th of 2008. A little bit of a rocky market back then too. Again, the average daily close 19.4. The median daily close 17.5. The minimum daily close, a little bit closer to home, this was 9.14. You remember this one? Talked about it on the show recently. This is back in November 3rd of 2017. A lot of great charts and stuff they've tweeted out and put out about this stuff, too. We'll try to put some of these in the show notes. Of course, VIX options, where we like to sink our teeth every week, came along in 2006. That ADV has grown pretty steadily. It was pretty anemic back when it started in 2006. Obviously, in 2010, it hit nearly 250,000 contracts a day. These days, it's a little bit north of 1 million, right about 1.05 million out there right now. So it's been a steady, inexorable growth. By the way, that ADV in 2006 was 23,500. So not even 100,000. Took 93,000 in 2007. Took about till 2008 till the ADV broke 100,000 contracts a day. Of course, looking at the universe now, there are a lot of names that put up 100,000 contracts a day. So it has been, and people think of VIX as this kind of overnight success, but it did take a while. Futures had to come out first. They had to change the index up. It's been 25 years. It's been a lot of permutations going on in that mix. Couple other data points that kind of that caught my eye here. Biggest one-day moves for the VIX Index. You guys can probably guess the first, which was the 5th of February of this year, 115.6. By the way, Mark, you have to give up on the percent of percent fight because even CBOE's tweeting this out now, so it's official. Everyone's talking percent of percent. And Mark, since you don't read the notes, I won't let Russell guess because he probably knows the answer. But I'll have you guess. What do you think is the number 2 biggest one-day percentage move in the history of VIX, sir?
The second biggest one-day move. I'm going to say August 2015, whatever. What is that, August 8th, something like that?
An excellent guess.
August 19th.
That is actually, like let's see, 1, 2, 3, 4, 5, 6. That's number 7 on the list, actually. So you're in the top 10 at least. I'll give you that.
All right. Maybe that February date, February of 2007, maybe?
Well done. Yes, 27th of February, 2007. Are you looking at the notes now? Did you finally pull up the notes?
No, I just remember that day. It was such a shock. I think we went from like 9 and change up to over to 20 or something like that.
Yeah, that was the beginning of the whole. Was at the beginning of the whole Merrill thing, right?
The bad China data came out.
Yeah,
and we tanked.
And the AI, all that stuff started rolling. Yes.
Yep.
So I'd ask you, Mr. Rhodes, but you probably A, have looked at the notes, and B, probably helped compile this stuff. So I
compiled all those numbers.
Yeah, that's kind of what I figured. So I would leave you off guessing your own numbers. I'll just run down the top 10 here for your listeners. February 5th, number 1. February 27th, 2007, Mr. Meatball got the second one. Number 3, November 15th, 1991. An obscure data point out there. Then July 23rd, 1990. August 8th, 2011, June 24th, 2016, August 21st, 2015. We all covered that one. We talked about it on the show. And then 11th of May, 2017, April 24th, 2017. Those are the biggest updates. That's 46.4. So we go from 115% down to 46 and about 0.5% for the 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the top 8 updates there. And the top down day in one day. You want to guess that one, Mr. Meatball? The number 1 down day in VIX history, percentage-wise?
The number 1 down day for VIX, percentage-wise. That's going to be a little tougher. Let me think. I'm going to say...
I'll give you the year, 2010.
Okay, so I'm going to say the year, like August 9th, the day... or excuse me, May of the day after the flash crash, right? The day after the flash crash.
That's pretty much
May of 2010. May whatever, or something like that.
The flash crash, I believe, was the 6th. This is not exactly the day after, but a few days after. This is the 10th of May, 2010.
Well, the flash crash was on a Friday, so it was.
It would roll. It'd be the next trading day, I suppose.
Yeah.
So there you go. May 10th of 2010 is the biggest down day. 29.6% there. So there you go, listeners. A lot of other data points. We'll include those charts in the show notes. You can find them. I'm sure CBOE has sent them out a bunch of different places as well. Let's do one more. This is fun. It's a fun guessing game. Again, Mr. Rhodes compiled all this data, so I won't make him guess his own data. Mr. Meatball, if you're up for some more guessing, let's guess again, this is also doubly fun for you because you have to guess percent to percent, and I know how much you hate that. So let's go biggest 1 month percentage move in the history of VIX, sir.
Biggest 1 month percentage move in the history of VIX. So we're talking start to finish.
Yes.
While
you're doing that, I'll read off some other data points. The VIX has moved more than 35% on 24 months during that time. So 2 years of VIX moving more than 35% in a single month, which is interesting in and of itself. Does that buy you some time, Mr. Meatball?
Yeah, I'm gonna say let's try August of 2015 again, because vol had been so low. The other idea might be like, we almost January would have been an interesting one as well. Yeah, January of this year.
You'd think this year would be on the list, but I'm surprised not to see this year anywhere in the 1, 2, 3, 4, 5.
Because of the timing of the Fed sell-off and where Jan was. But let's try like August of 2015, because I want to say the beginning of August, VIX was like 13 or 12 and was like in the 30s at the end of it.
Yeah, that's pretty much what it was. August 5th, 2015, 134.6% to the upside. Followed number 2, SEPA 2008, 90.8%. Number 3, August of 1998, 78.5%. And then October of 1997, 53.2%. Also July of 2011 and October 2008, also around that 53% gain. But yeah, this year, not on the books. I think just the way the numbers worked out percentage-wise. And we actually kind of retreated a little bit and moved him back down. So net, we didn't really move that much on the month for February even. So yeah, it's been, you'd think this year, I'll have to go dig in the data points. I don't know, Mr. Rhodes, you're the keeper of the data. Do you know where these January and February offhand, do you know where they fall on the list? Mr. Rhodes, are you there? Are you in a Balkan prison again?
Yeah, he lost us. He said.
Okay. You guys you're breaking in and out on me. And I was talking and you broke out on me. I was just going to say, when you're trying to figure out the biggest up months, you have to think about months that have volatility events toward the back end of the month. That's all.
Yeah.
And,
that's important.
Yeah, you broke in and out. They've put me on the interior of the building now, which they got to put me back in a corner office just so I don't lose signals.
See, this is what.
You're not in the corner office anymore, huh? They've moved you to.
No, he's the front desk. He's a receptionist now.
Oh, nice.
I'm the receptionist front desk up on the up in the it's a good way to get FaceTime with the executives.
Exactly.
There you go.
It is well done. Yeah. Well, Mr. Rhodes, you compiled this data. Any other nuggets, interesting data points that stuck out to you, sir, in the vast 25-year history of VIX?
Yep, but I can't share them because they're coming out over the next 3 weeks.
Wow.
Oh, good God, sir. We're going to send you back to the Balkans. We're going to send you back to the Balkans. Instead, let's kick off the segment proper while Mr. Rhodes goes back to the Kamloops. We're going to do official now volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Vol Review, of course, a portion of the show where usually we don't look back on 25 years worth of VIX data, but there's just so much to talk about there. We had to at least give it a notice. You can check it out for yourself. I'm sure if you go to the CBOE blogs, you can find all that secret data that Russell's afraid to share with us here, lest we share it with the world, which is our job here. But of course, what else is being shared with the world is a lot more volatility. Again, we're recording this, streaming it live the 6th of April, coming off the heels of a non-farms that didn't quite perhaps deliver what a lot of people thought. We also see renewed aggression in the on-again, off-again, on-again trade war here with China. All of that combining to send the markets right back down. The markets giveth, the markets taketh away. There in the taking away mode yet again today. Most of the major indices off 1% or more. S&P and Q's right around 1%. The Dow actually north of 1%, about 1.3%. All of that means we're back in the 20 handle for VIX cash, up over a handle out here, 1.3 handles or so, or 7% of percent for all of you out there who like such things. And looking a little bit firmer here to end up the week after it seemed like we were going to maybe settle out back in the teens. That would have been nicer for me for my prognostication efforts from a couple of weeks ago. But c'est la vie, we can't be greedy here. All right, Mr. Rhodes, it's been a while since you've done this, so hopefully you remember how it's done. But what caught your eye, sir, in this week's just smorgasbord of volatility?
Every once in a while, we seem to be seeing a disconnect intraday between what VIX is doing and the S&P is doing. Where it's like not quite biting the way that you would think that it should when we're getting a sell-off. It seems to be really ignoring what's going on news-wise as well, kind of waiting for some sort of confirmation as opposed to what the most recent rhetoric is. But the thing that really, really, really has just is amazing to me is the flat line, not necessarily amazing, but interesting to me, is the flat line that is the VIX curve. You can't even, it's almost like we got to call it the VIX line, because the curve is so flat, and that just indicates to me that nobody out there has a clue right now.
Yeah, Russell, I'm with you. I mean, the resounding meh we're getting from VIX today.
Oh.
And even with this sell-off, I mean, here's if we did not have the kind of, I think the $100 million, $100 billion tariff announcement last night, I think we'd be green on the day. I'm actually a little shocked that we're not green. It kind of acted like it. Powell is speaking, now, in about 10 minutes. That could be a driver of some things. But I, as I look at this market, I feel like it's at the end of working its way through the tariff stuff. The idea that we're going to panic now on trade stuff may be kind of going the way of the dodo, and it will take some sort of real jolt to force the market. I feel it forced vol to make a significant move higher. I feel like things are pricing themselves like we're on the tail end of, we're on the last couple of innings of this big volatility event. There could be more to it, but like you said, we're down $33 right now in the S&P as you and I are talking, almost 34, and the VIX is barely above 20. The futures aren't moving. There's just a sense of, the market is ready for this. There's no panic. Nobody cares. And, and the algos look like they want to buy this, and they might. I don't know. Just really odd behavior.
You think we might shrug this off and end green or unched on the day?
I don't know about today, but I think I would, all those things equal, I would be buying the market end of day. If we buy the market at the end of the day today, I think that when I'm talking next week with you guys, I will have made a significant amount of money. That's what I'm thinking. If I buy now, I will be very happy in a week. That's my gut.
Well, it did seem like earlier this week we had kind of seen what we thought was the worst of the, ratcheting up of the tensions of the trade war, with China kind of firing back with their own. That's the shoe everyone was waiting to drop out there. What's China going to do? They announced their own kind of retaliatory tariffs, and so we saw the big sell-off. Then we saw the market kind of taking a breath and kind of rallying afterwards. It seemed like the worst was perhaps behind us. Of course, we saw this kind of piling on last night, which didn't help matters for anyone. Of course, triggering the sell-off in combination with the underwhelming numbers coming out this morning. Looking out there, our old friend VVIX, still not quite over 100. It's elevated. It's at about 95. But not quite breaking the 100 level. It was over 100 not too long ago. On the couple sessions ago, on the 4th, it hit about a 110 or close to it, and it was up there 118 back on the 2nd. So it has been a lofty 120 back on the 28th, the end of March there. So it has been pretty lofty recently. These days, a mere 95, which, given what we've seen out there of late, of course, back in the madness, the maelstrom that was February, we saw VVIX actually hit 203. So comparatively, we are relatively sane at a 95 out here right now, out there in VVIX lands. You mentioned the future is not really doing a heck of a lot out there, and you're right, the cash hovering right around 2075 or so right now. Excuse me, we're seeing that front month future up about 20, up about a little more than a point and an eighth, as they used to say back in the old days, and about 1955 out there for the 2 month out futures out there. So not a lot going on in the futures curve as well out there. Mr. Rhodes, I bought you a lot of time here. I know you've been traveling. I know you've been in the Balkan prison. I know you've been on the front desk doing front desk duty, so you haven't had a lot of time to watch all things VIX weekly options. You think you're up for a little bit of a weekly rundown, though, for old time's sake?
Oh, absolutely.
All right, then, let's get to it with Russell's weekly rundown.
Now, Russell's weekly rundown.
It feels good to hear that music again. We haven't heard it in such time. We've had other guests coming in and people doing it, and we haven't run that music, so it's fun to have it back. Mr. Rhodes, have at it. You've got, 32 minutes. Have at it.
Oh, don't tell me that. I could do 32 minutes. Just like always, back in the day when I would do this every week, we got a whole ton of Monday trades, some of them concentrating on the 4th, some of them concentrating on the 11th. I had somebody buy 166 of the April 4th 23 calls, paid $1.15 for those. Had somebody buy the same thing, completely different trade, different time, but they bought just under 200 of the April 11th 23 calls and paid $2 for those. Somebody sold a little over or a little under 400 of the April 4th 30 calls for a quarter. They did okay with that, but that scares the bejesus out of me. And then I saw an imbalanced long put stupid, which I've just made up that name. Somebody bought 110 of the April 11th 18 puts for 30 cents, and then also at the same time bought 140 of the April 11th 19 puts, paid 30 cents for the 18 puts, paid 60 cents for the 19 puts, looking for lower vol next week, at least midweek next week. Those are some of the Monday trades. Tuesday, somebody sold 175 of the April 4th 20 puts for a dime. And then somebody also sold 100 of the April 4th 21 calls for 95 cents. Just both those trades being done in the afternoon before the AM settlement. On Wednesday, everybody started paying attention to April 11th. There was actually a pretty good sized trade. Somebody bought 1,695 of the April 11th 37.5 calls and paid 20 cents for them. Somebody else came in and sold 200 of the April 11th 30 or 20 puts, for 70 cents, expecting vol to stay up above 20, I guess. Somebody bought 100 of the 25 calls for 90 cents, kind of expensive there on Wednesday. And those, again, are the April 11th that expire next week. And then somebody sold some of the 22 calls for $1.10 later that day, I think, as VIX had worked its way lower in the day. And all those were April 11th. Yesterday, this was a nice, interesting spread, one that I would consider writing up this weekend, maybe, but I'm on hiatus from writing things up. Somebody sold 100 of the April 11th 25 calls for 30 cents, and then they bought 200 of the April 11th 30 calls for 10 cents. Net result here is a credit of 10 cents a spread. As long as we're under 25, they get to keep that dime. If we get some sort of nasty volatility event, they could probably trade out of it fairly well. But a nice 1x2. Somebody sold some of the 22 calls that expire next week for 65 cents and sold some of the 21 calls as well that expire on the 25th. And lo and behold, I did not write that price down. So I have to go back and find that one. And then somebody must have called as I was writing that down. And then finally, today, the only interesting trade, and this is the kind of short volatility trade that I think makes sense for a lot of people. Somebody bought 400 of the April 11th 20 puts, paid $1.30 for those. So they're expecting what Mark Sebastian was talking about. They seem to be expecting lower volatility into next week, which would accompany a rebound in the stock market.
You're right. You're right. And yeah, Mark, we didn't bring up that VVIX, but yeah, how about, if you just throw out the SPX and the VIX itself and just pull up a chart of VVIX, it tends to be a really good leading indicator for VIX. Russell I'd love to have you comment to this. The absolute demolition of VVIX maybe points toward, I think, some sort of vol collapse in the index itself. Russell, I know you've played around with this. Is VVIX is a decent leading indicator for VIX itself, isn't it?
It is, and I learned that from you.
Oh, well, thank you. Thank you
You're
very
welcome.
much.
No, that's actually where that came from. So you started to say, maybe we'll ask Russell about it. I'm like, dude, I asked you about it.
Yeah.
That is most definitely a Mark Sebastian production.
Yeah, and, I'll tell you, it just, I don't see any panic in anything right now. I'm with you. I'm with you, Russell. Mm-hmm. I like that. I might maybe.
What's so funny about this show right now is, as we got going, we were talking about how people can't see us chatting among ourselves, but we're like, we've been trying to make volatility interesting for 2 years without anything going on, and now VIX is up around 20, and we don't have a whole lot to say.
No, I mean, there's plenty. The trading's been crazy. Here's the one thing that is interesting. Maybe not so much with VIX itself, but realized volatility in the S&P has been so violent with the moves, that it's been very difficult to lose owning straddles or iron butterflies, things like that. It's been very difficult not to not own premium. Premium sellers have been getting worked over by this market because of the up and down nature and the force with which it moves. But meanwhile, during that whole period, VIX is just kind of slowly, we've gotten the same moves, but the VIX has stopped panicking to those moves. And skew continues to be the trade of the year. When that thing flips expensive to cheap, the speed with which downside skew is moving is just, I don't know if you've been doing any playing with that, but curvature has really flipped at rates I haven't seen in years.
No, it's funny you mentioned the VVIX, because you're right. Coming into today, when we were looking at all the numbers, I was surprised, quite frankly, at how much VVIX does continue to erode. You think it would at least be well north of 100, given all the things we've seen over the last few sessions. But you're right, it is kind of steadily eroding, hitting its peak back at a 122, actually 133. Back on the 23rd of March, and ever since then, even despite the myriad shocks we've seen to the system over that time, it's been slowly and steadily eroding again south of the 95, south of the 100 handle right now, right around 95 as we're talking this week. So it has been a fascinating one to watch. I'll have to dig in some data about the correlation there. You can always tell a genius out there, right? Or because if you have a genius pupil, because you taught him. So there you go, Russell. When Russell echoes back your own data points to you, then you know. It must be good stuff. Speaking of data points out there, what's been going on in the big VIX mothership? Not quite 25 years old. No, the options came in 2006. It's the underlying index that is celebrating its 25th birthday anniversary. Call it what you will this month. And it has been an interesting month, or it should be week. Interesting month, too. But an interesting, pretty much month and week are all the same because we're in the beginning here of April in terms of all things VIX options. Today, actually surprisingly light given the fact that we're in an aggressive over 1% sell-off. And we had the non-farms this morning. Usually, middle of last year when we had no vol, a day like today would have sent VIX A skyrocketing north, and then B, we would have had well over 1 million contracts on the tape by now. Instead, it's about 250,000 contracts heading into 12:30 Central Time here, with a nearly 5-to-1, about 4.6-to-1 calls over puts out there in the big VIX mothership. ADV still hovering a little bit north of 1 million, 1.05 million to be precise, even though once again this week we didn't have a single day that hit that. Thursday, about 500,000, 523,000. Wednesday, 3/4, 756. That was the big day of the week. Tuesday, 423,000. Monday, 538,000. The call to put still hovering at a surprisingly slight 2.2-to-1 out there. I know a lot of you like to look at that, but we've been rocking and rolling and bouncing all over the place into the teens, back into the 20s. So not a lot of time for any size OI to materialize really in one direction or the other. People buy the puts, the underlying drops, they take them off. Then they buy the calls, we go back up. So it's been kind of a topsy-turvy period of late, but we're pretty much right around the same level VIX call to put that we were this time, actually 2 weeks ago when we last did the show. In terms of where the action is out there right now, the hot VIX strikes. Number one with a bullet in terms of big positions out there in VIX land right now. Things have come off quite a bit, as you probably would expect. We're not talking about the size 600,000 plus strikes we were, shall we say, a few months ago. We look at number one with a bullet here, the April 22s, 264,000 contracts for the number one spot on our list. Number two, the April 25s, 230,000. Number three, the first put on our list, the April 15 puts, 186,000. That 15 strike does seem to be a very popular strike. It kind of stays on the list regardless. April 15 puts month after month, week after week. So that guy, our friend there, kind of kicked off the interest in those, and then it kind of just had a mind of their own. Actually, he was on the 15 strike, not the calls, but still, the interest in that strike has just been interesting, shall we say, ever since. Number four, April 20s, 183,000. Number five, close on his heels, May, the first and only May on our list, May 37 halves. Interesting strike, 183,000 there as well, so pretty much tied for fifth or fourth there with the other one. Number six, the April 17s, 174,000. Number seven, the April 30s, 158,000 contracts. Number eight, The second put on our list, the April 13 puts, 153,000. Number 9, April 37.5. So that 37.5 strike is popular in both April and May. 137,000 open there. Number 10, the bottom of our list there, the first and only June on our list, the June 20s. Doing 136,000 contracts open there. Total, a little over 8 million contracts open, about 5.5 on the calls and about 2.5 on the puts. Mr. Meatball, I know you've been watching this. Aside from your crazy, funky, what was it again? It was a July strangle. Aside from that, anything catching your eye out there in terms of paper and big VIX mothership land?
Yeah, there's some interesting stuff today that's gone up. This was kind of interesting. Paper customer bought the 1621 call spread and then sold the June 32 calls against it. So kind of like a time ladder of some kind. Paid like a $1.20 for that, $1.30. We saw an ape 1x3 call spread. Bought the one 5,000 times, collected 18 cents. I've seen a lot of way upside call selling and then trying to buy some stuff nearer against it. That's kind of been what I think the theme for the week has been, that this big money wants to sell strikes 25 and higher, and they want to buy strikes, call it 16 through 20. That's kind of been the way they want to own the ats and buy as much outs as they can. Essentially, looking to be short VIX Vega, which would explain maybe why VVIX is acting the way it is.
Interesting. So you're seeing ratios out there 1x3, but not the traditional ratio we're used to seeing in VIX, which is selling one and then buying two or three. It's buying one and selling two or three. Yeah,
that was the script that has been kind of this week.
What could possibly go wrong with that trade?
Well, that big 1x3, 1x2, short one, long two, long three, that move was made. Unless we have a major system shock, could VIX go to 30? It could, but it's not going to go from 16 to 30. It's going to be going from 21 or 22 to 30, and the futures will be moving slowly with it. So I think that's kind of maybe what's driving this.
Yeah, I see the logic behind it. It always gives me a little bit of it raises the hackles on the back of my neck when I see that many short units out there, particularly to the upside in VIX land. Look at our old friend, the VIX whale. He was a comparatively conservative, only short one, long one, short two. And he still had to kind of sit dangling on that second leg for quite a while before he finally closed it out. It ended up working out for him, but I'm guessing he had a few interesting moments. Again, of course, they have other stuff on against it. I'm sure that was working out well. But just from a pure options perspective, it's an interesting choice nonetheless. Speaking of interesting, I know names you guys like to trade out there as well, is our old friend VXX, hovering close to 50 yet again. It broke over 50 earlier this week. Right now, hovering right around 49 or so. Got as high this week as 53.5 earlier. Actually, no, 53.82. Saw some nice upside given all these spikes, and then slowly started to erode again yesterday and kind of kicking back into life today with today's aggressive sell-off. But again, perhaps not quite as much as you'd expect given what we're seeing. But if this sell-off intensifies, then that probably will change. Mr. Meatball, I think you can keep the streak alive. I think you can guess yet again for, I don't know how many weeks running it is now, the number one options position out there in VXX. Uh-oh. Is the streak broken? Mr. Meatball, are you gone? Did we lose you?
No. It was the 2019 10 puts, correct?
There you go. The streak is alive, sir. You've salvaged it yet again. Yes, these puts persist. And these numbers are surprisingly unchanged from week to week. You think someone would pare something down or some other position would grow up to challenge that, something like that. But no, number 1 to 3 have pretty much been the same. Jan 10 puts, Jan 15 puts, Jan 5 puts. Kind of have been the same ratio, about 160-odd thousand to about 70-odd thousand out there in both of those other two strikes. So, yeah, not much changing in VXX land, despite the fact that we've had some decent movement out there. So, interesting stuff Those Jan 10 puts, shall we say, not what they once were out there in VXX land. Almost 3.5 million options outstanding there. About 2.2 million puts and about 1.3 million calls. Again, the bias to the puts, as we've said many times out there in good old VXX land. Let's really quick check on our old kind of diminished friend, SVXY, right around 11.5 right now, off 2% or about a quarter of a point out there today. Good old neutered SVXY. Oh, how we once loved you, and now not so much. In terms of, do you want to take a flyer on this one too, Mr. Meatball? What the number one SVXY of what's left of the options positions out there? What the number one is?
I'm gonna guess it's still the pars.
Nope, Mr. Rhodes. If you haven't read the notes, I'll welcome a guess from you as well, sir. Number one options position in SVXY. What's left of it?
Try to find the button. Let's see. SVXY. I'm actually trying to look at where it's trading right now.
It's about 11.5.
Bear with me. What? Okay, it's at 11:43. I'm going to say some long-dated 15 calls.
Interesting. But no, it's actually the Jan 25 puts. That position has been open forever. Someone opened it pre-meltdown and then never really closed it, which kind of makes me wonder exactly what the heck was going on with that trade. And maybe they were well timed and got frozen. I don't know. I never investigated where. Maybe that's a thing we'll have to look into when those puts actually were open. But they've been open for quite some time, and you've had many opportunities to close those out at better prices than they are now. So kind of a bit of head scratcher. Number two, though, you were close, Mr. Rhodes. Number two were the Jan 25 calls. 30,000 of those are close to it. And then the Jan 22 and a halfs, 17,800 open there. So it is calls, except for the number one, which are still those crazy, funky, weird puts that no one really understands, but they were well timed. Commodity vol, really quick. Again, if you like commodity stuff, stay tuned for TWIFO in about 45 minutes or so. We'll be getting into all this in a lot of detail with some fun guests. We'll be talking crude vol, gold vol, all that fun stuff. Ags getting annihilated this week because of the tariffs and all that kind of stuff. We'll be talking vol out there as well. Crude vol popping up, OIV, which is, of course, the old VIX of WTI, pushing 25. Which is a comparatively lofty level. It was down, way lower than that not too long ago, back into the teens back earlier this year. So 25, a little bit of juice back in good old WTI again this week. Gold also, we're actually kind of unched compared to where it was this time a week ago. We're talking GVZ, of course, which is the gold VIX. There we go. My system will cooperate with me a little bit higher, about half a handle higher out there in GVZ. About 1180 is about 11.3. Actually, 2 weeks ago, the last time we did the show. And let's just check in really quickly on all things Bitcoin over there, because that's also lumped into commodity. See how the Bitcoin futures are trading up these days over there at CBOE. Looks like about 3,500 on the tape so far today. Bitcoin hovering around 6,600. Right now with about 3,500 contracts, all of that pretty much in the front month. That's pretty much how Bitcoin seems to trade front month all the time. By the way, we talked on TWIFO before if you want the vol numbers. Implied vol averaging for Bitcoin, I think around a 94% front month, and it recently hit about 104. So it's been around that 90-odd to 100-odd% level for some time out there. All right, speaking of time, let's see if we got time for some of you guys here on the show. Actually, before we do that, I'll toss to you guys really quickly, Mr. Meatball, Mr. Rhodes. Any commodity vol catching your eye, or perhaps any other vol ETPs out there we didn't include that you think are worthy of mentioning? Now is the time. The floor is yours.
Oil vol starting to move. I've been shocked at how low bond vol has stayed. I think Bill Gross is actually on TV talking about the fact that bond vol as a strangle has been a relatively easy sale. Now, at some point, that will bite Bill Gross in the butt, but I do think that I've been surprised that we've not seen more action out of the bond market around, everything that's been going on.
What's really interesting with respect to the volatility of commodities, it's low. It continues to be low. What's been going on in 2018 really has focused in on just the equity space more than anything else. Even the bond volatility, TY VIX, hasn't been doing a whole lot. So while I was on vacation and listening to, because when I'm on vacation, I listen to podcasts and whatnot. I heard somebody on a podcast say that the volatility in 2018 has been very much of a equity-oriented thing and not carrying over the market. So then I started checking the numbers, and they were right. They were absolutely right, and it's still kind of there.
Yeah, it's a thing we've been kind of lamenting on our TWIFO program for some time. A lot of these big products, gold, take your pick out there, have been at or around, many-year lows in terms of volatility. You look at the volatility cones, our old friend on this show, a lot of these shows are at many-year lows from those perspectives as well. So, yeah, volatility, that's been a question we get a lot on our TWIFO program, actually, is when is vol going to come back to crude or gold, or pick your commodity of choice? And we see brief spurts as there are little sell-offs, and then the sell-offs never really have any teeth, or the movement never really has any teeth, and the vol just comes back in again. And it's kind of been a repeating pattern, especially for crude ever since that big OPEC meeting in November of the year before last. That's when the skew seemed to really change, and the volatility kind of just got wiped off the map. So we'll see if that holds true. Again, if you like that kind of stuff, we'll be getting into that in a lot more detail in a little while. Again, about 45 minutes for TWIFO with some special guests and all sorts of fun stuff there. In the meantime, though, it's time for you guys to join us as special guests. It is time to check out your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins, questions, comments, insights, slams at the meatball, all of the above. We will entertain, and some of them we'll actually read here on the air. We got a couple of combo, related questions, excuse me, from people, so we'll get to these. Actually, before we do that, we'll get this one because I'm not sure if this one sounds familiar. I'm not sure if you've answered this before. Maybe you guys will refresh my memory. This comes from HFL9. They ask us here, would you rather see options on Bitcoin futures or more futures listed on more crypto products first? I'm going to lay my vote in first. I'm going to go for options because that really would allow me to play as opposed to slinging the futures, which I really don't have a huge interest in. I'd much rather waiting for the options so I can do what I like to do. I'm not a big underlying slinger. Mr. Rhodes, what would you rather see, the options first or more underlyings?
Options first, and I can tell you that that's not my opinion. That's what I hear from most people when we have these discussions, is they really would like the options. And actually, here's one of the cool quotes that I heard about this. Buffett said that he would love to buy a put on Bitcoin. But that's all we heard. But the rest of the sentence was, but I sure wouldn't short it.
Right.
Exactly. I think that's the sentiment of our entire audience.
That, and nobody heard that part because it wasn't because then everybody gets confused. You guys even had to pause for a second.
No, yeah. That's
popular press doesn't throw that one out there, but you know what he means. But
that's I agree with him 100%.
That's exactly how I feel. I wouldn't short it with a 10-foot pole, but I would touch the options all day.
They might be kind of expensive.
Yeah,
that's another.
Yes, that's another conversation. Again, we've actually gotten to that on TWIFO too. Some of the implied skews for Bitcoin options, and you're right, they're kind of rich. Mr. Meatball, any thoughts there?
I agree 100% with Russell. I agree 100% with you. I agree 100% with Mr. Buffett. I want to see some options on these cryptos.
We all agree with Mr. Buffett. These are good shoes to be in, at least when he's agreeing with us when it comes to options. All right, now we got some related questions. I guess a lot of people must have this question on the brain these days. Lil Nicker and Barry both asking kind of the same question. Lil Nicker asking, how do I tell which future a VIX options, this is confusingly written, a VIX options trades off of? And Barry asking almost the same question of how do I tell which future my VIX options are priced from? I'm looking at some calls expiring on April 18th. Thanks for the show. So I got all these questions all of a sudden. So I kind of did some looking myself to see how different platforms kind of display this information and whether some do or don't, because you would hope at least the brokers would surface this for people. I started looking in live vol. They do a good job of this in the live vol because they actually will put it when you scroll through the chains. If you look at the top of the chain, you could see right there these options are off the front month future, and here's the price, and here's how many days it has to go, and the volume and things like that. And that's kind of what you would hope that a lot of brokers would do out there, and yet fortunately that isn't the case. My cursory looking before this show of different platforms, I didn't see a lot of people really surfacing. They put up the splash warning saying, warning, trading VIX, they have a bunch of other risks, and so they do that, but they don't really surface that info a lot. I don't know, maybe Mr. Meatball, we'll start with you. Do you see this being a problem for people out there?
I could see it being a problem for sure.
So what do you do when you want to tell which future your options are trading off of? Do you have a trick you want to pass along to Barry or Lil Nicker?
Well, one, I look at the month and say,
that's a good starting
it's
point.
This month.
But I can see this confusion. There's weeklies and stuff now.
Be nice. With weeklies, it's a little bit difficult.
With weeklies, it's a little bit different. But okay. So if you want to know where your underlying future is, all you have to do is do a combo or an in-the-money option. So like in the weeklies that expire next week, the 11th, right now the future data is off because they're not really trading, right? So if you look at the bid and the ask, the last is 2060. The bid is 2060 at 2110. So the real future, if I were going to look at, like, let's say the 15, I might look at something like the 20 combo, or the 19 combo, or the 21 combo.
You're being too difficult.
And I would create a thing. Problem is, even the deep in the money call stuff are really wide, which makes it difficult.
Yeah.
So you have to do in the weeklies, if you don't have good futures data, you kind of have to do the at the money combo to figure out what's going on. And so, for instance, with the 20s, the 20 call is $1.65. The 20 put is 75 cents. So then the fair value, 165 minus 75 cents is 90. So 20 plus 90 cents is 20.90. The fair value for the April 11th future is $20.90. And there you have it, folks.
Just terrified, Lil Nicker and Bear. I do say that's one of my favorite responses from you, though. I look at the month for the future. I'm still laughing about that. But yeah, I'm with Russell. I can see how people could be confused, particularly with the the advent of the weeklies and things like that. Yeah, you're right. You can do the combo. I think you just scared a lot of people. Of course, that's just pretty much a front month synthetic, listeners. For those of you who don't know what that is, if you do, you should look it up. That helps you price these things out in a way. So even if you're on some random options chain somewhere, if you could somehow wrap your heads around where the at the money should be or near around that, you can do the combos and you can kind of figure that out. I don't know, Mr. Rhodes, do you have any less terrifying advice for people out there?
Well, the ones that are more liquid, the standard options, yeah, you can just right now, if you take a look at the April 18th, which is the standard expiration, you look at the 10 strike calls, they're 1040 by 1070. The midpoint is 1055. I switch screens. I take a look at where those futures are. They're at 2055. So there you go. Taking the midpoint of the bid ask on the deep in the money options, at least outside of the weeklies, is what I suggest people do when they don't have access to the futures quotes.
Probably a little bit less terrifying than explaining people the depths of synthetics and having them go down the rabbit hole. Let's see. We got time let's do one more quick one. Got a lot of lengthy ones here. This one goes on for pages. Let's do a quick one here. How about here? Our old buddy Mark Brandt writing in. He wants to know, will rising vol persist all year? So he says, will VIX be above 20 or VXX above 40? He says at least half the time. Interesting. It could be a little poll here. I'll kick it off just for fun. I'm going to go out on a limb, even though what we've seen of late says there's more vol to come. I'm going out on a limb and I'm going to say no. We're not going to spend half the year above 20 and VXX above 40. Mr. Rhodes, where do you fall on this? Yes or no?
I think we're probably going to hover around the upper teens, but not up to the 20s. It seems like every frightening piece of news that comes out doesn't make VIX sustain higher levels. So, I would bet for the under on that one.
Yeah, increasingly diminished impacts as we're seeing even today.
Yeah.
With not quite the terror it was. February 5th, quite the terror. These days here, April 6th, not so much. Mr. Meatball, where do you fall? We got 2 votes for no. Where do you fall?
I'm with you on the no vote.
3 votes for no. There you go. 3 votes, and we're not going to have VIX above 20 and VXX above 40 for at least half of the year. Let us know if you guys agree or disagree. Meanwhile, it's time for us to do that for real. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. The crystal ball, of course, the portion of the show where we try to just wrestle that slippery greased pig. Easy for me to say. That is the VIX cash. You remember the last time we did this was actually 2 weeks ago. It was me, the Meatball, and you and Sinclair all guessing on where VIX cash would be around this time. Looks like Ewan takes it. He's the closest. He's about a little over a handle away. He was 19.5. He was the highest of the guesses amongst us. Mr. Meatball was kind of splitting the difference with his revolutionary pick of 1776, and I was on the downside with 16.85. Ewan's not here to accept his award this week, so instead, because Mr. Rhodes hasn't been here in a while, he hasn't had a chance to guess in a while, we'll let him go first. Mr. Rhodes, right around 2070 or so right now in VIX cash. Where do you think we'll be this time next week?
I am going to say that we are going to party like it's 1999.
Interesting. You and Meatball lately choosing historically relevant levels here. Mr. Meatball, you going to do it twice in a row? Are you back at 1776 or something else?
No. Today we're going to do 1789, which was the year the Constitution was ratified.
Mm-hmm.
There you go. Let's go all the way back. Let's go deep. Let's go Articles of Confederation. Let's get really deep.
What would that be? What 17?
That'd be earlier. That'd be like probably before 76. Probably like 17. I don't know, 69, something like that. I'll have to look up my Articles of Confederation dates. But that would be all sorts of fun, historically relevant. I'm not going to go historically. So what do we got? We got just about 20. Mr. Meatball, Mr. Rhodes playing with 20, but not quite getting there. Mr. Meatball going deeper on the historical archives of 1789. I too am feeling lower. My low guess last time was a wee bit too low, but of course I kind of went lower because I wanted to kind of give Mr. Meatball some of his 17s. I kind of feel 17, so I'm going to go, this is why I hate going last, because it gives me such little wiggle room. I'm going to go, what did I say last time? I said 1685. That might be a bridge too far. I'm going to say 17.15. There we go. I am once again the low man on the totem pole. I will see how this plays out for me in the coming months. Or more accurately, the coming week. That's as far out we're going. Of course, that music means, listeners, we've come to the end of this exciting journey through the world of volatility. What a journey it's been. Talk commodity vol, talked a little crypto. Got more of that coming, by the way, listeners. If you're listening live, you can tune in a little bit for TWIFO this week in futures options, where we'll get all that good stuff going. Skew, implied vol, crazy changes, OI, big unusual activity, and all the big names kicking it off with ags and getting into crude energy, all that kind of fun stuff. So stay tuned for that in about 30 minutes for TWIFO. And, of course, all the other fun stuff here we talked about on the show today. Keep those questions coming. We had some vol this week, so kind of squeezed out questions. We'll get to more of them on future shows. Don't worry. But before we go, let's go back around the horn really quickly. Let's start with the Meatball. What is cooking in the land of all things Costco, sir? Uh-oh, did we lose the Meatball already? Did he already head out to Costco?
I think he's probably...
They've got good shrimp at the Costco and inexpensive gas. So that's what's going on at Costco. At Carmen Line, we've had a pretty successful launch with our new fund. And obviously, if people are interested in a smarter way of being long the S&P 500, it's the place to be.
Mr. Rhodes, same question for you, sir. What is cooking in the land of reception at CBOE?
I'm looking forward to this week, and apparently I have to go over to Mark's house and install a new hot tub that he just picked up along with some shrimp at the Costco.
There you go. Doing a little manual labor on the side. Hey, you got to do what you got to do to pay the bills. You can't all be hanging out in the paradise on earth that is the Kamloops region. All right, on behalf of Mr. Rhodes and the Meatball, excuse me, and indeed myself, I thank all of you for downloading, streaming, subscribing, all the fun stuff that you guys do. We love you. And if you're listening live, stay tuned. We'll be back in about 30 minutes for all things TWIFO. Otherwise, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.